Hello and welcome to this special presentation on Bitcoin and the stock market. In recent years, both of these markets have seen incredible growth and volatility, and they have captured the attention of investors around the world. In this presentation, we will take a closer look at the relationship between Bitcoin and the stock market, exploring some of the factors that have driven their respective performances, and what the future might hold for these two important investment classes. Part 1. Bitcoin. Bitcoin is a digital currency that was created in 2009 by an unknown person using the name Satoshi Nakamoto. It is a decentralized currency that is not tied to any government or financial institution. Instead, it operates on a peer-to-peer network that is maintained by a global network of users. One of the reasons that Bitcoin has become so popular is its scarcity. There are only 21 million Bitcoins that will ever be created, and currently, more than 18 million have already been mined. This scarcity has driven up the price of Bitcoin, making it an attractive investment for those looking for a store of value. Another factor that has contributed to Bitcoin's growth is its use as a medium of exchange. More and more retailers and service providers are beginning to accept Bitcoin as payment for goods and services, which has helped to increase its adoption. Despite its popularity, Bitcoin remains a highly volatile asset. Its price can fluctuate wildly in response to news events, market sentiment, and other factors. This volatility has made it a controversial investment, with many investors questioning its long-term viability as a store of value. Part 2. The stock market. The stock market is a collection of exchanges and markets where publicly traded companies issue and trade shares of stock. It is one of the most widely followed and important financial markets in the world, with trillions of dollars in assets under management. The performance of the stock market is driven by a wide range of factors, including economic indicators, corporate earnings, geopolitical events, and investor sentiment. In general, when the economy is strong and corporate earnings are growing, the stock market tends to perform well. Conversely, when the economy is weak and earnings are declining, the stock market can suffer. In recent years, the stock market has experienced incredible growth, with major indices like the S&P 500 and the Dow Jones Industrial Average reaching record highs. This growth has been driven in part by low interest rates, which have made stocks more attractive to investors seeking higher returns. Part 3. Bitcoin and the stock market. While Bitcoin and the stock market are two very different investment classes, there are some interesting parallels between them. For example, both are highly volatile and subject to fluctuations in response to news events and market sentiment. Additionally, both have seen incredible growth in recent years, with Bitcoin experiencing massive gains and the stock market reaching new record highs. One factor that has contributed to the growth of both Bitcoin and the stock market is the influx of new investors. As more and more people become interested in investing, they are looking for new and exciting opportunities to put their money to work. Bitcoin and the stock market have both benefited from this trend, as investors look for high growth opportunities that can help them achieve their financial goals. Another factor that has contributed to the growth of both markets is the increasing use of technology. In the case of Bitcoin, its decentralized nature and the underlying blockchain technology that supports it have made it an attractive investment for those who believe in the power of technology to disrupt traditional financial systems. Similarly, advances in technology have made it easier than ever before for investors to access the stock market, with online brokerages and trading platforms making it possible to buy and sell stocks from anywhere in the world. Part 4. The future of Bitcoin and the stock market. While both Bitcoin and the stock market have seen incredible growth in recent years, there is still considerable uncertainty about what the future holds for these markets. In the case of Bitcoin, many experts believe that its long-term viability is still in question. While it has proven to be a valuable asset for some investors, there are still significant risks associated with investing in a highly volatile and unregulated asset like Bitcoin. Additionally, there are concerns about the environmental impact of Bitcoin mining, which requires massive amounts of energy and has been criticized for contributing to climate change. In the case of the stock market, there are concerns about the sustainability of current valuations. While the market has experienced incredible growth in recent years, there are signs that this growth may be unsustainable. For example, many experts are warning that the market may be overvalued, which could lead to a major correction or even a market crash. Despite these concerns, there are also reasons to be optimistic about the future of Bitcoin and the stock market. For example, advances in technology are likely to continue driving growth and innovation in both markets, while the increasing adoption of Bitcoin and other cryptocurrencies could help to legitimize these assets and make them more widely accepted. Conclusion. In conclusion, Bitcoin and the stock market are two of the most important investment classes in the world, and both have seen incredible growth and volatility in recent years. While there are significant risks associated with investing in these markets, there are also opportunities for those who are willing to take on the risks and explore the potential rewards. Whether you are a seasoned investor or just getting started, it is important to understand the dynamics of these markets and the factors that are driving their performance. By staying informed and taking a thoughtful and disciplined approach to investing, you can navigate the complexities of the Bitcoin and stock markets and make informed decisions that help you achieve your financial goals.